Hi guys, welcome back to Property Tax News. So Rishi Sunak has just delivered his 2021 budget. Lots of plans in terms of tax changes there, going to have a massive impact on the whole country. And I've digested it and I'm giving you the key information you need to know as a property owner, as a business owner. What does it mean for you? So the first thing to mention is that furlough has been extended until September 2021. It will be changing in its current form. So basically businesses will have to contribute a certain amount of money to the scheme from the end of July, we've been told. And then other changes include the self-employment support scheme. So previously those who hadn't filed a tax return, a lot of those guys were excluded. Now they've opened the criteria up, widened it slightly. So if anybody who's filed a 2019-2020 tax return, they will be eligible in these, I think it's the fourth and fifth rounds of the grants. They will be eligible to receive money from this, which is absolutely fantastic news. In terms of apprentices, so they've got the government incentive of £1,500 for basically incentivising companies to take on apprentices. This has been doubled to £3,000 per new apprentice hire, making it extremely attractive in terms of hiring apprentices within your business. And then universal credit, that's been increased by £20 per week as well for the next 6 months. The biggest change in this budget though, which is going to impact a lot of landlords and a lot of business owners, is the increase in corporation tax. This has been leaked over the past couple of weeks and unfortunately it is now coming true and looks like it will be going ahead. Currently our corporation tax rate is 19%, so on £100,000 worth of profits your tax would be £19,000. From April 2023, this will be going up to 25%, meaning a £6,000 increase for a company with £100,000 profits. They have said though that there will be a small profits rate, so for any company with under £50,000 in profits, you will be paying the 19% corporation tax rate. So this naturally does give rise to some fantastic planning opportunities. And in terms of operating separate limited companies, this might be an option given that there could be a substantial tax saving there for companies, especially if you've got trades which could be split out and otherwise would have two separate limited companies. Another tax update would be the super deduction, which is all about encouraging companies to start investing more. Like some of the R&D relief, you get 130% deduction of investment expenditure, which means usually you get 100% deduction, which means it's fully allowable for tax purposes. In this case, you'll be getting an extra 30% on top of that, meaning you will actually be getting more taxed off the cost of the investment. All of the income tax rates have been frozen, the inheritance tax rates have been frozen. This is definitely bad news because they tend to go, they're supposed to go up in line with inflation as wages increase. Unfortunately here they're being frozen until 2026, which means on a cash basis, a lot of people are losing out here as those rates aren't rising. And again, alcohol and fuel duties have also been frozen. In terms of the housing market, what's been announced? So we've got the 95% government mortgage, the government-backed mortgages. So a lot of the big banks are being partners here. So Barclays, Santander, HSBC, NatWest, all of the big banks, they will be offering 95% mortgages from next month. This is fantastic news for the property sector because it really will help the property sector stay buoyant and stay moving as the economy does open up again. So for those who are in the build sector, the flipping sector, this is going to be a fantastic time to look to sell properties. House prices continue to increase due to the rise in new mortgage applications coming through and as a result of the government backing those mortgages. Other things about the property sector, so the stamp duty holiday has been confirmed that it will be extended until the end of June to help all of those transactions go through. This is great news for anybody buying houses. It's really going to help prop that market up. For investment companies, there's a slight benefit there, and it's basically the nil rate bands up to £500,000, but you are still paying that 3% surcharge. So stamp duty is still a cost for property investors, but the benefit is there, small nonetheless. On top of this, businesses will be able to access a new recovery loan scheme, which on the face of it looks pretty similar to CBILS in that it's a government-backed loan up to, which is 80% government-backed, and these loans are from £25,000 all the way up to 10 million. We don't know the fine print of these loans yet, but as soon as it's released, we'll do a separate video on that. But if you are looking to take a loan out to help grow your business, this could certainly be an opportunity to get that. The Chancellor unveiled a £5 billion restart grant scheme. So a lot of those businesses that have been forced to close down, there will be grants available up to £18,000 to one-off grants, not repayable, that are going to help push your business forward as the economy starts to reopen. So other news, so the serviced accommodation and the hospitality side of the property sector, VAT will continue to be cut. Currently it's 5% and it will stay at this rate up until the end of September. And after this, it will go up to 12.5%, a new rate of VAT, and it will be staying at that rate until April, only at which point it will go back up to the 20% rate. So as you can see, it's been a mixed bag of a budget, not quite massive tax breaks or tax reliefs and loads of grants that were kind of rumoured. In terms of what's actually happened, it's a bit of a non-event. It's the main thing here for property investors is that taxes going up 25%. So that's really what I take away from this. But in terms of all the levy tax allowances, it's going to result in a small amount of tax payable, but it's not a massive reform. Capital gains tax, most importantly, is still safe. There's a lot of rumours around that being increased to the same rate as income tax. Business asset disposal relief, that was due to be kind of completely axed. There are rumours around that. But for now, all of those reliefs are safe for another year. If you've got any questions, you want to know how this impacts you, please do drop them in the comments below. Otherwise, smash that subscribe button and give us a like. Cheers for watching, guys.